This TFMR podcast is brought to you by Cyber Metals, a new digital precious metal platform from your friends at JM Bullion. Visit cybermetals.com for more details. Welcome back to your TF Metals Report podcast highlights for the week of July the 11th through July the 15th, 2022. Another very difficult week for the COMEX precious metals as the dollar continues to soar. Not so much on dollar strength, absolutely not. Mainly on extreme weakness, not only in the Japanese yen, but in the euro currency. That makes the dollar look stronger. The computers see the dollar going up, and what do? They reflexively sell COMEX metal futures. So we got to keep an eye on the dollar. There's been some kind of rally, and it continued on Monday, July the 11th. All right, you want to see what a bull market looks like? We've talked about this lots of times. You're in your raging, strong bull market when your 50-day is upwardly sloping and it's above your 100-day, and that's upwardly sloping, and they're both above the 200-day. Your RSI is just cooking along above 50. Well, that's what we got here in the pig. Look at that thing go. Going back to late last fall, right around the first of the year, even through the month of January, the pig's down there at 95. And now here we are, 15% higher. Doesn't mean it can't go higher. I mean, yeah, the RSI is at 74.5. Maybe it blows out and then that puts in a short-term top. But this is clearly still in an uptrend. Next resistance, as we've been discussing, really doesn't look like it comes in until 110. That's 2 more points from here. There's a lot of emphasis on inflation this week as the CPI and PPI both came in extremely hot and higher above than expectations. One of the key components of inflation is energy, and of course that means crude oil prices, which look like they are on the verge of moving lower. They've been holding above $95 a barrel for quite some time, but the chart on Tuesday the 12th began to look like a breakdown was coming, and that's just one of the things we discussed that day. And here's crude. Moment of truth again. I don't know. It sure looks to me like maybe this time it's done. It's going to break down through 95. Now, that's what it looked like back in the middle of April, too. Came down from the those crazy highs of Ukraine in early March and came all the way down from 130 down to 95. And it looked like, okay, it's going all the way back down to 85 or 65, and then it bounced. Then it came back down to 95 again, and in the early part of April, even closed below 95, and man, it looked bad. And then it bounced. And then it came back down to 95 again later in April. And then it bounced. And then it came down to 95 again just a couple weeks ago. And then it bounced. But boy, here we are today, down again, like I said, $8 today. Some pretty nasty stuff. You can see there is support at 90. There's also, I think, more defined support at 85 because 85 had at once been resistance in the last 9 months, back in October and November. So we take out 95, that might be where we're going, more like 85. And again, it looks like it will, if anything, because it's so deeply below its 50-day moving average now. These other bounces, we were at least pretty close to the 50-day, or even still above it back in March. But now we're failed to get back above it. This looks like it's breaking down. And with the demand destruction of the higher rates and the global economy in the toilet, but then you also throw on, this thing with Biden, and they're cranking out the 1 million barrels a day. Yeah, it looks like it's going to 85. I spent most of Wednesday the 13th traveling, so I was unable to record a podcast for TFMR members that day. So instead, I focused on some audio I'd recorded earlier in the week with Lynn Alden. Lynn, a very sharp cookie, an investment analyst and strategist who runs her own website. And you should check out all of this audio, this full 20-minute audio at sprottmoney.com. Go there, listen to this podcast. Lynn addressed a number of topics. One of them was, when will the Fed pivot? What will force the Fed to pivot? Here's a little snippet of what she had to say. But again, I encourage you to go to sprottmoney.com to hear all of what she had to say.
So I think there are 3 major things that could cause it, and it could be a combination of them. But basically, so the short answer is no, I don't think it'll be the stock market itself. Basically, the stock market itself does not force the Fed to pivot. usually the things that force the Fed to pivot are occurring alongside stock market crashes. So it
Yeah.
kind of can look like the stock market's doing it, but it's actually stuff underneath the surface. And so number one would be, say, credit markets breaking. So when the Fed had to start pivoting rate hikes in late 2018, it was because the junk bond market completely froze. So even though we had a 20% correction in the S&P 500, the bigger problem under the surface is that the weaker end of the corporate bond market just completely froze for like 6 weeks. Not a single junk bond was issued, and that's a more alarming signal to the Fed than just stock markets going down. Number two would be something at the core of the system breaking. And an example in late 2019 was the repo rate spike, the overnight lending rate between financial institutions that broke. So that forced the Fed to stop reducing their balance sheet literally that day. And they never went back until, just recently. And then two, like I said, March 2020, the treasury market broke. And so the Fed had to basically have emergency meetings and just throw literally $1 trillion at that market in a 3-week period, which was unprecedented. And so something close to the core of the system in financial markets breaking, like credit markets, treasury markets, something like that would force the Fed to start basically changing their course.
We're right back at it on Thursday, July the 14th, looking at the updated charts of gold, silver, and all the rest, looking for any sign that there was a bottom or any type of reversal. Maybe, just maybe, there's something in the chart of the GDX, which is that major gold miner ETF. We'll have to wait to see how things go on Friday and into next week even. But the candle looks suspiciously like what could be a reversal. So that was something we discussed. Again, Thursday, July 14th. GDX on the daily chart. Now here's a little hope. Again, I don't want you to think I'm just trying to blow smoke up your ass, sunshine, try to fool you into being optimistic about anything. But I want to draw your attention to these candles. Do they not? See where I've highlighted them? We came down in the middle of December, bounced off that important support of 29. Notice that candle followed by, big green candle the next day. Notice at the end of January, again, bouncing from 29, notice that candle. And now today, breaking down below 26, but notice the candle. If we can get a big old green candle tomorrow to the tune of about a point and get back above 26, then we're going to have a reason to at least have something happy to talk about or optimistic to talk about in tomorrow's podcast. Friday, July the 15th, mercifully brings to an end a lousy week in the precious metals. Rather than look at the precious metals charts, I'll just leave you with this. We got the latest update on the GDP Now model that comes out of the Atlanta branch of the Federal Reserve. This is a real-time projection of the U.S. economy. The first quarter, they were projecting a contraction of 0.9%, and it came in at negative 1.6%. Well, now with this latest update, the Fed GDP Now model is projecting a contraction of negative 1.5%. We'll get the first actual guess at GDP in about 2 weeks. Will that confirm 2 consecutive quarters of contraction and thus a recession? Yes, it likely will. Now, you can't tell the Fed goons that. They're all out there running their mouths this morning on Friday, talking about how great things are and how they were going to cherry pick whatever data they want to make it seem like the U.S. economy is strong and robust. Well, in the real world, it's not. That's what the Atlanta Fed GDP Now is projecting, and that's what eventually will drive a change in Fed policy. And when that happens, it will be time for the precious metals and the mining shares to soar once again. We're just not yet at that point. But we'll stay on top of it at TF Metals Report, and we encourage you to join us there. In fact, there's even a coupon code this week after my appearance on the Greg Hunter program at USA Watchdog. If you'd like 50% off your first month of a membership at TF Metals Report, just sign up, select the monthly subscription option, enter the coupon code HUNTER at checkout, and you'll get 50% off your first month. It means it'll cost you $7.50 rather than $15. If you stick around after a month, you can pay full freight like everybody else. But at least give you a chance to come in and see what a valuable community TF Metals Report truly is. And that's what you need at this critical time. Community to help see you through this terrible economic storm that we are in. So come find us at tfmetalsreport.com. Buy a subscription. Join the membership. I do not think you'll regret it. Have a great weekend, everyone, and we'll see what happens next week.